This podcast is brought to you by the award-winning prop firm Fidelcrest. Trading Nut, episode 208.
If you are relatively new to trading and you're just on YouTube looking at, price action patterns or indicators, you should definitely go and look at why the market's moving. Not how it's moving, not candlesticks. Ignore the charts. Go and look into why it's moving and what's actually going on behind the candlesticks. Why is that candlestick green, or why is there an uptrend? Why is there a downtrend? If you can work those things out, then you can start working out what to look for before they start, and that's how you can catch these huge swings in the markets.
The market's going to do something. Your job is not to fight it.
The market never, ever runs away. It's always there.
That personal diary of trading will make you a much better trader than...
I could be right about the direction, but wrong about the trade.
Don't focus on the monetary side.
Trying to make too much money on a trade is what I have seen killed every trader.
Your losses offer you some of the greatest insight you can find into your mistakes.
Relax, learn the process.
Candlestick pattern trading is a freaking trap.
Don't be in a rush to become a millionaire.
Let the market tell you what the market wants to tell you.
This podcast is not financial, trading, or investing advice of any kind. What's up, traders? Welcome to another installment of the Trading Nut podcast. I'm your host, Cam Hawkins, and this is the first episode of 2023. So hopefully you folks had a great holiday period with your friends, family. You're all refreshed and ready to hit the markets this week or next. Now, what have we got for you today? We've got James from Elite Traders here on the show. Now, James is... 5 years ago, there or thereabouts, he infiltrated a bunch of expert traders. So you're going to find out how he managed to do that and get to where he is now. We've got that full story coming up in the show. Then we jump on a price chart and also another tool which he uses, which I'm wondering is a tool that all Forex gurus out there use that they don't tell you about. I'm just guessing. And this tool manages to give him the ability to trade in the right direction most of the time. So guys, if you want to check that out, there's a video dropping on that. And we've got his colleague on as well from Elite Traders, Dex Diamond, to talk to you about bank reports in the Forex market and how he leverages them to get really high win rate, good trades that work. And you're going to be quite surprised. It's probably one of the first times that I've really understood fundamentals at a more granular level. Okay, so this is a fundamental episode and show, not fully, but mostly to start the year off here on Trading Nut. Now, other things that are completely not fundamental, my Robot Builders Club, I'm going to do a boot camp for some new members in the coming weeks. Now, if you are listening to this now, you're interested in trying to learn how to build trading robots without doing any coding at all, then this boot camp, which is only going to be a 3-hour boot camp, could be the prime opportunity to learn this skill. Now, you're going to get a good head start. So if you're a sort of self-starter, this could be for you. Now, I'm not 100% certain of whether or not I'm going to open the boot camp up to everyone, but if there is an opportunity, if you like the sound of this opportunity, then hit me up in my email, support@tradingnut.com, or just DM me on Instagram or Telegram or whatever it is. Let me know you're interested and we'll see if I decide to do it. So folks, that could be something you sink your teeth into here at Trading Nut early on in the year. All right, folks, enough from me. Let's get on with this first interview of 2023. Fidelcrest is an award-winning prop firm that funds traders with up to $2 million and offers generous profit splits up to 90%. So what sets Fidelcrest apart? Well, it's their verification stage payouts of up to $30K in as little as 15 days. So you can receive your first payout prior to becoming a fully funded trader. Just complete the challenge phase and verification stage without violating any rules to receive your first payout. And be sure to use promo code TradingNut, all one word, to get 10% off your next challenge. Click the link in the description below or the card above to find out more. All right, folks, here we are on Trading Nut. We've got James from Elite Traders in the house today. It's a bit of an Elite Traders series. We've actually got James and another trader who's going to be on the channel from Elite Traders as well. So we're covering technicals, interviews, fundamentals as well, which is a bit different. So welcome to the show, James.
Yeah, thank you for having me. I'm glad to be here.
So you've been trading for 5 years. We're going to hear that story, how you got started, how you got into it, and how you found your way to the path of profitability and where you are to where you are now. So do you want to start off with that?
Yeah, sure. So my journey actually started very basic. There was no like fancy things. I didn't start in a bank or anything, or didn't even go to university for economics or anything like that. I was working a normal job in media, just doing design work. So the income in that sort of line isn't amazing. So I was looking at ways to sort of compound money or make more money for the long run, really. I wasn't looking to get rich or anything, specifically speaking. So as I was learning to sort of invest and how stocks worked and what all that sort of stuff was, I then started to obviously learn more and more, did some more digging. And then I came across more actively trading. So like on eToro and things, like, you know, obviously being more involved. And then from there, you know, it took off. And then I started looking at Instagram and things. I got into that horrible whirlpool of Instagram traders and gurus, diamond necklaces and sports cars and things. And then it kind of went really wrong because my whole perception was wrong. It was like, okay, well, investing slow and steady, whereas trading is, you know, quick, heavy, make a lot of money. So I ended up losing a lot of money. I lost pretty much all of my life savings at that point. And I'm very stubborn or egotistical, whatever you want to call it. But in this sense, it actually paid off quite well because I wouldn't allow myself and I wouldn't allow the markets to take my money without me at least trying my absolute best to get it back. And then, yeah, from there, I started looking into like mentorship and learning how the banks trade, because obviously the banks don't trade like I did, because otherwise they wouldn't make money. So yeah, I really got into the deep details of trading. And yeah, from there it started to pick up.
And what markets were you focused on back then?
Honestly, it was US 30 because I lost all my money in US 30. So it was a bit of a grudge against that. And I started to understand what US 30 was. And then from then I expanded into more of the currency side of things. But yeah, all started in US 30.
Oh, okay. So it's interesting that you've gone from US 30 to Forex versus the other way around, which seems to be what most of my guests tend to do.
Yeah.
So okay, so how did things start? So you decided to look into mentorships and into what the banks are doing. How did things start to turn around for you? I mean, what were the key elements to that?
So I actually stopped trading for quite a long period of time in between that. So from the point of losing money to getting back to trading, I sort of stopped and I was like, okay, I need to reevaluate because, you know, I was stuck in a job. I loved my job. I love the industry and things. It's what I was passionate about. But after about 2 or 3 years of working full time and stuff, it wasn't for me. I was tired every Friday and the weekends were shit. So yeah, I needed to take a break and reevaluate a lot of things. And I decided to just carry on working, carry on grinding. And I started some, not drop shipping, but sort of like, selling things to people I know. So I'd find things on Facebook Marketplace, for example, and I'd sell them to like family and friends for a little bit of a markup. Obviously I wasn't scamming them. There's no crazy markups, but you know, a bit of profit here and there. And then, yeah, so I just saved money until I could afford mentorship. And then I followed quite a large meme page on Instagram, and he used to promote one of his affiliate mentoring or whatever it was, with Alex Duadari. So I took that. I learned quite a bit there. And then once I started getting more foundations and realized there is a lot more to the markets than just candlesticks and patterns and stuff. And then, yeah, that's when I started to turn to like how the banks work and getting the bank reports on a daily basis and things. And I was like, okay, I'm starting to understand now the switch has flipped.
Okay, so what was can you sort of explain the difference between what you first originally learned and what Alex was teaching you? What were the key sort of elements there?
So the main difference was, as I said, it was the Instagram world. So there was no, there was no really anything to solidify it. It was all money flexing and things. So I didn't know about journaling. I didn't know about back testing or anything like that. So I was, I'd see, for example, a lower high or support and resistance, and I'd buy or sell, and it'd be very impulsive and based off very, very weak analysis. And, I saw like a bearish candle. I'd be, okay, I'm going to sell now. And obviously we both know that's not how trading actually works. But, to someone who doesn't know trading, that it would make sense to do that.
Yeah. Okay. So to start out, you started out as you were essentially, just in there doing the clicking of the buttons and hoping for the best.
Pretty much, yeah.
Okay. Yeah. So there was nothing behind it. Now, how did you started back testing and journaling. How did that stuff start to evolve into you as becoming a profitable trader?
Well, I got to strategy first of all, which is an absolute must if you're looking to trade for the long term. So I started out with a sort of a price action based strategy, which was mainly trying to find levels in the market where you'd see reversals or pullbacks or continuations or just levels where something would happen that could give me some sort of confirmation, whether it's to get out or enter or whatever it is. And then from there, I realized that no matter how strong a level might be or how big a pattern might be or whatever it is, the markets can still break it. And I didn't really understand why. And again, this goes back to the bank reports and the fundamental side of things that I looked really heavily into. And then it might sound stupid, but at the time I didn't really understand how a currency could be moved by the country and economics and things. I had a basic understanding, but there was nothing there for me to actually trade with. So yeah, I started to learn about inflation and GDP, and NFPs and all that type of thing. And it was, from there, it was like, okay, well, that's why supports are getting broken, is because the economy versus the other economy is actually a lot worse, or for example.
Now you sort of mentioned bank reports in there. Well, you didn't sort of mention it. You mentioned it. How easy was it for you to get these bank reports, and how did you know where to go?
Honestly, it was very much coincidence. So Joe, my business partner, he sells bank reports as like a side gig for him or something. I don't know why he does it, but he sells them. I don't know how he gets them. He won't tell me. He won't tell anyone how he gets them. But they're from like ING, HSBC, all the big banks, and they'll explain things such as they'll go into as much detail as possible, because these are the same bank reports that they send out to their own traders and own analysts and teams and things. So within the first 30 minutes, you can get a very solid idea of what the bank's looking at, and then that can give you a very solid edge in the market. And
so you basically knew somebody who could get you the bank reports.
Pretty
easily
exactly.
Back then. Okay,
yeah.
Right. So all right. So when you started actually placing trades, how did that go?
Yeah, it was. I mean, I'm not going to lie. I wasn't profitable straight away, obviously. So it took a lot longer in terms of I was learning obviously about risk and lot size and how all that works. And I was like, okay, well, before I was just putting, I don't know, maybe 2 lots on US30 with a $5,000 account or something, because I didn't really know, I didn't understand. I was like, oh, if it hits my stop loss, I wonder how much I'll lose. Whereas I started to learn that, pips and lot size are related. So it's, I started risking 2 to 3%. I was continuing to lose. And I was like, okay, I'm going to tone down my risk to 0.5 and continue to develop and learn. And then, once I found the nice line of profitability, I moved back to 1% per trade. And
so what were the sort of key elements to becoming profitable? So what you'd say, like, I've now aligned all these things up. What were they?
Okay, so it basically goes to my strategy. So the first thing is look at bank reports. So I get an email with the bank reports it's either every day or every other day. But the fundamentals don't change that much within a day or two. So it's normally fine. So I'll read the news, I'll read the bank reports, I'll see what the high level, big market moves are looking at and what they think's happening. And then it will go down to looking at data for myself. I'll basically take what they've said and look at it again. I'll be like, okay, well, that does make sense. So now I'll look for a trade. So once I've got all my data and my research done, then I'll look at levels, like I said. So I'll say, okay, well, there's a solid psychological level there, which might be parity on EURUSD, for example, which for anyone that doesn't know, that's just 1.0, which has recently been hit. And we saw quite a significant pullback, which is bullish. So things like that, for example, I'll look and be like, okay, well, we're at a significant level. Retails are still majority short, so I'll start looking for a long, for example.
And so in terms of so you got the bank reports, you're getting the levels, then how are you managing that to get into trades and stuff? And back then, was it sort of, did you have confidence in these levels, even though they come from bank reports and you knew that
honestly,
they could be flowing through?
No, because I didn't really understand why the levels worked. I just knew that they did work because I was told they worked, if that made sense. I didn't understand the why. So I didn't have much confidence in it, but I just continued to use them until I actually understood, a bit more about them. I knew, okay, well, just because it's at this level, it doesn't mean something's actually going to happen. And it's things like that. It's just starting to understand a bit more with experience. With time comes experience.
And so would you say you were quite lucky at the start when you started to make an account grow?
Basically, I fell into, I don't know how it happened really, but I fell into like a network of very good traders in terms of like profitability. And I got quite a lot of guidance, which I know a lot of traders don't have. So I was very, very fortunate in terms of my start. But yeah, account size was minuscule. I think it was under $5,000 at the time because obviously I already lost all my money.
Right. Okay, that's quite interesting that you've managed to fall into just a whole bunch of traders that were really good. I know. If you look back, I mean, what were the key elements to trying to making it? Why do I keep saying elements? I keep saying elements in this show. I don't think I ever say it in any other show. I've said it about 10 times. It's annoying me. What do you think? Why do you think you ended up falling in with these guys?
I think that's a really good question. So because Elite, we get the same thing. So at Elite Traders, obviously, we're a relatively large group. So we get a lot of people asking us for, help or guidance and things. But I think the thing I did very differently was I was quite grown at the time. When I say grown, I was like early 20s. So I was quite mature for my age. And I was very curious. I wasn't there. They knew I wasn't there. And I made it very clear I wasn't there just to make money. I had no interest in actually making money at that time. I wanted to learn. And I just asked and asked and asked, and it wasn't stupid questions. I wasn't like, what's a lot size? You can do on Google. I'm not going to go to these 6-7 figure traders and ask them how to use lot sizes because obviously they'll think I'm stupid. So I'd find things that I just didn't understand and I'd ask them, and they would be very open and honest and friendly because it wasn't stupid questions that, I can Google. It was genuine questions that made sense. Yeah. And yeah, I think it was just the thing they knew that I was there to learn. I wasn't there to leech off them. I wasn't there to get rich or any of that bullshit.
Yeah. And I think that's sort of probably number one thing that's going to put any experienced trader off is somebody who's like, comes with the first question of, I just want to make 10% a month with like, on my $100 account. And, I just want to get compounded there every single month. Right. So, okay. So how did things sort of mature for you as your trading career went on?
Pretty well. So after the mentorship, I was still testing and journaling and back testing, developing, optimizing, all that fun stuff. And then it got to a point where there just wasn't that many losses anymore. I mean, I was sorry, there was still losses, but the losses weren't there anymore. As in, like, I'd end the month and I'd be like, oh, that's, I finished the month with £100 profit. And then the next month it'd be maybe £10 profit. So a lot less, but it's still profit, which in my eyes was huge progress. And then it started just working from there. So after a profitable month, I'd go back to my journal. I'd be like, okay, well, these are the trades I've took. And then let me look back when I was unprofitable. And what was the differences? Was there entry differences? Did I draw my levels differently? What have I done differently when I made money compared to when I wasn't? And yeah, I think that was a huge thing. So then, once I had a solid understanding of what I was actually doing that makes money, I did more of it. And I just carried on, and it kind of compounded from there. Obviously, deposit every month, make some money, and it sort of snowballs.
And so can you remember what those differences were?
Yes. So going back to not really understanding how levels worked exactly, I had that sort of thing with everything. So I understood bank reports. I understood levels. I knew that they were useful. I knew I should use them and things, but there was things like inflation. Okay, inflation's up. That's not great necessarily, dependent obviously. But why is it not good? Like, is that now going to make the dollar weaker or stronger? If it makes it stronger, how much stronger can it get? And it's things like that. It's like just getting more of an understanding of these things can completely change everything for you, really. So it's taking what I already knew and just doing a lot more research in it.
And so if you had to sort of break your trading up into fundamental versus technical, what percentage split would you have?
I would say about 70-30, 70% fundamentals, 30% technicals.
Right, so heavily skewed. Yeah. Okay. So that's quite unusual for the show because a lot of people just, on the show probably have like a 95-5 split. With a fundamental bias, what's the sort of win rate and risk to reward on your trades look like?
So this is kind of the negative part of being so fundamentally based, is that my trades are a lot slower than most price action based traders. In terms of my win rate is about, it does alter. It ranges from about 49 to 52%. And my risk to reward on average is about 1 to 2, maybe 1 to 3 at a push. So it's a lot slower, and obviously it's swing trades as well, because fundamentals are best with swing trades in my opinion. But yeah, it's with like price action traders, for example, they can make 5% in the morning during London session, and then they're done for the day. Whereas 5% would be sort of my good month.
Right. Okay. And do you ever sort of like, and I suppose this is a question like traders often struggle with, looking at what other people are doing with this, some might make 5% in a day, you're making 5% in a month. Do you ever sort of go, well, why didn't I take that path to get to that point? Or do you sort of have a vision of like, can I get to that point? And how do you stay on track?
I did try, but it just never worked out for me. I don't know. Again, it could have just been that I didn't really understand it well enough to do it, to what to expect with certain patterns and things. Because I don't use patterns. The most I use in patterns really is higher lows and lower highs to determine trends. But yeah, that's really it. So I did try things like wedges and flag patterns and all sorts of stuff, and it just never really worked out for me. I'd have days where I'd like double my account. Again, this was back when my risk wasn't great, so I'd double my account in maybe a week, and then I'd blow all of it because I got too cocky with a certain pattern or whatever. So I just never had great experiences with it.
So how many trades are you taking on a weekly basis on average?
Maybe it could be anywhere between 1 and 3 a week. 3 would be on the heavy end. That would be quite a lot for me. But yeah, maybe 1 or 2 a week that gets me by.
And what markets are you looking to trade?
All currencies, US 30, NAS 100, gold and silver, and maybe oil, but very rarely.
And what timeframes do you get in on?
The 4 hour. So I'll enter on the 4 hour time frame. All my analysis is done on the 4 hour and upwards. So it'll be 4 hour, 1 day, 1 week, and 1 month.
Okay. And what's your typical trading day look like?
You know what? It's very casual. Because it's swing trades, I don't sit down for a London session or any specific sessions and sit down for a few hours and do that. So I'll wake up in the morning, I'll check the trades, see how they're doing, and that's about it. And then if there is anything I need to do, such as move stops to break even or close out or whatever, then I'll do that. But yeah, a lot of my day is spent working on elite traders or outside doing stuff. Trading doesn't take over my life. I think trading is one of the careers you can do on the side and it be a full-time job, if that makes sense.
Yeah.
You can treat it like a part-time job or a side hustle, and it can still pay quite well.
Yeah, it's interesting. I mean, and I suppose that's what people are looking for. A lot of people are looking for. They don't want to necessarily be glued to the screen for 8 hours a day, which is they've replaced your 8 hour day job with another 8 hour day job,
exactly,
which might pay more. Okay,
that's
okay,
true.
so that's quite interesting. So what do you think made you different from the average trader out there at the start? Do you have any traits? Do you have any things that you think might made you different?
I think I'm very, very stubborn. Again, that goes back to not giving up when I lost everything. It was like, okay, I'm going to go back. I'm going to try and do it properly this time. And a lot of patience and discipline. I don't agree with, I think that there's the saying of doing the same thing over and over and expecting different results is the definition of insanity. And I think that's very true. So if something doesn't work, I will then go back and change it and try again and change it and try again until I've got a solid enough proof that either it doesn't work or it does work. And it's about, especially as a retail trader that hasn't come up in banks or institutions or anything like that, you've got to be very persistent and you've got to be disciplined and patient. And if you don't have that, then, I don't really see a future for you in the markets.
And I think there's that fine line that people tend to confuse in their own heads around, like, if it doesn't work, move on to the next thing versus strategy hopping, where you've got a strategy that does work, that you don't give it enough time, you lose one trade and go, it didn't work, so I'm going to move on to the next strategy, but you didn't actually play through the whole sequence of at least, let's say, 10 trades, so you got a win rate of some effect and an overall, like, did it make return? That's interesting. Now, what about, like, in terms of your account growth? So you said, you started off with like under $5,000, and at points you'd lost everything. How did you sort of manage to scale it to make it and have it as an income, a reliable income source?
So I was I was quite fortunate, but so when I was younger, the only thing I was interested in was like coloring and drawing and things. So I was very creative, but I was very academically poor. I didn't really do well at all in terms of academics. So the area I went into was design, graphic design and motion design more specifically. And it was in live TV. So it paid okay, but it wasn't crazy. I think I was on about £29,000 a year at 18, which is okay. It's quite good. But at the same time, I was also living on my own in London, and London prices are pretty crazy. So it left me a little bit of wiggle room in terms of salary every month. So I'd have maybe £400 or £500 left over. And then that would basically just get deposited. I wouldn't do anything with it. It'd just get put into a savings account just in case I needed it. And then once my next paycheck came in, that 500, whatever it was, would get put into trading. And that just repeated and repeated and repeated. And obviously, as I got a bit older, I got some pay bumps and things. And it was basically just any money I had went back into trading. And it's very simple. And then, like I said, I did a few things on the side, like selling products and things to raise extra money. But yeah, there's no cheat code. People think, you can get $1 million account in a year or two, and it's really not that at all. You've got to put some work in. You
didn't go down the route of the prop firms, and I don't even know if they were probably that prevalent back then.
No, the FTMO was quite popular, but it was I didn't like the idea of that, just because again I was quite stubborn. I wanted my own money. I didn't want to trade a demo account with 100,000 in it and then get profit split, because I've done the work. I want the money. It's my account. I'm doing everything for you. So I didn't really want to go down that road. I'd rather spend a bit of extra time. Bearing in mind, I was still quite naive at this point. So I probably could have done that and got some extra money as well. But at the time I didn't really see it like that.
Yeah, it's interesting. Because I think back then, before the explosion of prop firms, it was the general sort of thinking, like, I'll just use my own money. What about if you talk to a retail trader and they were working a job like you were? What steps would you recommend they take to start earning income or growing an account, should I say?
It depends on their personal situation, of course, but let's just take a typical average Joe that's got a 9 to 5, Monday to Friday, earns an average income. I would say if you really want to be a trader, you're going to have to put the time in. So you're going to have to sacrifice your mornings, wake up an hour earlier, go to bed an hour later. You have to sacrifice some of your weekends, because a 9 to 5 doesn't leave you much time, really. So yeah, be prepared to sacrifice time and then save as much money as possible. So I would say if you can save, for example, £300 a month, which I think is reasonable for a 9 to 5, maybe put £150 into trading, and £150 aside for things like education, whether it be mentorship or courses or whatever you need. And that way you've got an account slowly building, and it's not your life savings. So if you do blow it, it's not the absolute end of the world. And then you've also got some money left over for education, so you can actually become a profitable trader.
Okay, and so what about if you had to sort of talk about the technical side of what you do, what other things other than market structure do you use to help you get into one of these fundamental base trades?
Well, I use a third-party platform called A1 Edge Finder, which is basically where I get all my data for myself, excluding like bank reports and things. So when I see data change, I'll let's say, for example, let's take EURUSD again, for an example. When it hit parity, we saw, I can't remember if it actually happened, but let's just talk in examples for now. Let's say we saw a cot flip. So let's say we saw, rather than institutions heavily short EURUSD or heavily long, whatever, we'd see it reverse. So in this case, let's say they were short and then they flipped to long. And then I would go, okay, I need to prepare to get in with this now. And then again, the same goes with retail sentiment. So I'm not sure how many traders are aware of this, but it can be called all sorts of things. So DXM or retail sentiment or whatever. But that tells you what percentage of retail traders are in what positions. And because 95 roughly % of retail traders lose, I always trade against them. So if there's, 57% short and then 40% long, whatever, 47% long, whatever, then I'll go long against the retail traders, against the majority.
That's interesting. That's interesting. I think I've got a vague recollection that somebody else has mentioned that on the show, like not very long time ago, but definitely in the last probably 2 years, where they look at the retail sentiment and trade against it. So that's interesting. There's correlation there in that information. Okay. What about from a mindset point of view? Have you stumbled across any or encountered any mindset issues around your thinking, holding trades, that sort of thing with this like swing trading, slower approach?
Yeah, I really struggled with patience. In terms of, I'd have the patience to wait for a setup, but then, if it was, let's say, if it was almost a stop loss or 70% towards stop loss or whatever, and then it went into maybe 40, 50% profit, I'd be like, oh shit, is this just a pullback? I'm going to close just in case it's a pullback and it hits stop loss. So I'd be very overly cautious or a bit impatient, whichever one fits. So yeah, I would, that was one of my more toxic habits that took a long time to get rid of, actually, was closing trades too early. But then I'd also let them hit stop loss, which is, that was like one of the final things I had to learn to actually get over that profitable border, was to just leave my trades alone. I've set it for a reason. And if I want to close it, I'll go back and look at my reason, and that's it. And then as long as data hasn't changed, as long as nothing's actually changed to swing the trade in a different way, then it's completely fine to just leave, in my eyes.
Okay, so it took a little bit of a time to get there. I mean, have you got any sort of hacks or tips or tricks that you can share with the listeners around, like, that you use on a day-to-day basis to get your trading, to get your mindset in the right space for trading?
Yeah, so this is what I tell our members quite a lot, is that you need to disconnect from your money, in terms of not disconnect in a way you don't have any feeling for it, but in a way that it's not your money anymore. So as soon as you deposit and you start trading, that's it. That's your business account. That's your expenses list. So stop losses are fine. Take profits are great. But if you start, messing around a bit, closing trades too early, or just being irresponsible, the only person that affects is you. It's, this is a business. You're in a competition with banks, with institutions, with billions of dollars going around every day, and you're too weak to hold a trade for an extra day. It's like, you got to put yourself in perspective in a little bit, I think.
Now, what about I suppose, if from a fundamental point of view, I mean, what would you recommend somebody go away and try and master? If they had to spend like a month mastering something, what would be the one thing you'd say, this is probably going to be the best thing you can go away and teach yourself?
Okay. Economics, for sure. I mean, you can't learn all this stuff in a month. But if you are relatively new to trading and you're just on YouTube looking at, price action patterns or indicators, you should definitely go and look at why the market's moving. Not how it's moving, not candlesticks. Ignore the charts. Go and look into why it's moving and like what's actually going on behind the candlesticks. Why is that candlestick green, or why is there an uptrend? Why is there a downtrend? If you can work those things out, then you can start working out what to look for before they start. And that's how you can catch these huge swings in the markets. So yeah, that's pretty much it. Just learn the background of the market, the things you don't see on the chart. Go and learn all that.
And how, where would be a good place to start?
Baby pips, for sure. Okay. It's nothing, there's nothing overly detailed on there, but there is some fundamental stuff on there. So you can just start reading things like that. Even correlations, for example, like the CAD and oil. Just learn the basic things. And then once you've learned the basics of baby pips and the correlations, then start looking into, okay, why is oil related to CAD? Oh, it's because oil is in the Canadian economy quite heavily. Okay, that makes sense. And then you can start branching out from there. And it becomes very easy once you set a timeline or a sort of a thought bubble for yourself.
And so you eventually ended up coming up with this thing called Elite Traders that you run. What was the genesis around that, and what do you guys do?
It was basically to counteract a lot of the social media BS you see on social media. We see, there's a lot of people that are flexing jewelry and cars and all this sort of stuff. And at the end of the day, you go to their profile and the whole thing is just leading you into a link, whether it's mentorship or signals or whatever it is, which I don't really have a problem with. But when you're flexing a diamond bracelet or whatever it is that you bought with signal money and not trading money, but then telling people to go and join your signals to earn money, to me, it is very scummy and it shouldn't really happen. So we started Elite Traders to basically counteract that. We're here to teach people how institutions trade. Our traders are from institutions. We do have 100% proof of that. There is, we're not retail. Well, I am a retail trader, sorry, but my traders aren't, sat in the bedrooms trying to trade or claiming things that they can't do. So I spent a long time reaching out and networking, trying to find real traders that knew what they were doing to A, share the trades, and B, teach people how to trade or how they trade, sorry. So yeah, that's basically our whole aim is just to do some good and show people how we actually approach markets.
Yeah, nice. And was it difficult to find these traders that are working as part of Elite?
Yeah, so I found the first one, which I think you've got the interview with. I found him through the network I was speaking about previously when I was first learning. And then, he knew some people. Obviously, he's got a very solid background. So he actually recruited a lot of the traders, not me. But yeah, it took us probably 6 months to get our full team together.
Okay, interesting stuff. Now, we're going to dive into a quick fire round here and then we're going to wrap up. So how long did it take you to go from newbie to consistently profitable?
Let's say 1.5 years.
What's your favorite entry setup?
Break and retest.
What strategies do you use to exit or manage trades?
Sorry, could you repeat that one?
Strategies to exit or manage trades.
Okay, sure. It's if there is a fundamental change in news or anything's happened to change the way the market's actually moving, then I'll close out. Or if my trade's in 1% profit or more, then I'll move my stop loss to break even. That's it.
Okay. Do you have any recommended trading book or resource?
No, I can't say I've actually read an actual book about trading. I mean, not to do a self-promotion here, but I have just got my team to put together a PDF, which is going into what I'm talking about, which is the more deep part of the market and not trading patterns and things. So I'd say that could be quite beneficial for some traders, and it's completely free. Okay,
cool. And I guess it's Elite Traders, yeah?
Yeah.
Okay, cool. And what about your preferred broker and trading platform?
So we use 8cap. They're very, very good. And we trade on MetaTrader 4 and 5. Personally, I use MetaTrader 5.
Hey folks, ever wonder what broker I use? Well, I use Hanko Trade. It was a no-brainer because I was looking for a broker with good trading conditions and one that wouldn't restrict my leverage. Now, by joining Hanko Trade, I've also cut down my trading costs significantly with their super low commission of just $1 per 100K. You can learn more at hankotrade.com or just click the link I've put in the description. Do you want to walk us through your worst ever trade?
Yes, that was the US 30 trade where I lost everything. So I used to have a screenshot of it. I deleted it because it annoyed me, but what was it? Oh, okay. So it was markets just closed on US 30. I think it was like a Thursday night and you had 1 day left to trade. And I was like, okay, I'm going to turn this $5,000 into 15 grand by Friday. So I put everything I must have had maybe 6 or 7 lots on US 30. I think I was going short and it was just in a massive uptrend. But because I didn't really understand trends and things, I was like, oh, well, it's dipping a little bit now, so I'm going to sell. And I remember I was up all night, I guess. And I had work in the morning. I was up all night watching the chart. And I was watching my equity go down and down and down. And I saw my MetaTrader go into red, obviously, which is near margin call. And I just saw my trade to close out, and I had to go to work after losing my life savings, and it was very, very sad.
At least you weren't too old at that point. Now, if you could leave our listeners with one piece of advice, what would it be?
If you're learning, break up the learning process into parts. So you've got price action, you've got fundamentals, you've got these things. Don't go on YouTube and just how to trade or trading profitably. I wouldn't recommend doing that at all. I would break it up again. So learn things like entry patterns. Go and research into entry patterns. Okay, you've done that. Now go and look into fundamentals and do it in segments. So you remember it, and B, so it's all sort of regimented. So you know exactly what you're learning, what you need to do, and how that applies to your trading, rather than, just going on YouTube and searching how to trade.
Now, before you wrap up, what's the best way for traders to get hold of you?
So Instagram is Forex James, with double X at the end of Forex and double S at the end of James. Or you can head over to our website, which is elitetraders.io. If you use code NUTS25 at our checkout, you get 25% off for 3 months.
What was the code, sorry?
That's pretty much it. NUTS25, NUT25.
Okay, cool. Well, look, guys, big thank you to James for sharing with us today. Everything we've discussed here, along with all those links, and we'll put the promo code in there as well, are in the show notes on tradingnut.com. Until next time, wish all my listeners trading happiness and success. All right, folks, there you have it. Interview done and dusted with James. Now, we did shoot a video after this where he breaks down not just what he does from a technical point of view on a price chart, but also this tool that he uses, which I'm wondering, this is the tool I said at the start of the show. I was wondering if Forex gurus out there are using this tool to help them get most of their trades right, and they're not telling you. So I don't know, it might not be the case, but I'm just wondering if this could be the case. So you're going to find out what that is in the video we shot after the show. And there's another video up this week as well with Dex Diamond, who is a colleague of James's over there at Elite Traders, and he walks you through how to leverage Forex bank reports, all up here on tradingnut.com. All right, folks, thank you for watching, and we'll see you in the next one.